Good morning and welcome back to Almus Market Mornings. As the 48-hour self-imposed deadline by President Trump approaches, the current state of affairs seems no closer to a resolution. For markets, the threat of a drastic escalation is still on the realm of possibility, keeping things on the edge. Moving on to domestic markets, it's been an interesting time for rupee traders, carrying on from the RBI directive-led moves. Apart from the movement in spot USDINR prices, there has been substantial move in forward premiums as well, with short turnout premiums spiking more than the longer end. Morning, JK. Just a question for you. Are such elevated forward premiums a market expectation that rupee is expected to weaken from present levels? What's your take?
Morning, Swaraj. Uh, yeah, it could be a part of the reason because what happens is if importers are hedging their forward positions, payables, they end up paying and the premiums get a lift. But apart from that, now we have a special situation wherein banks have to unwind their huge long position in the onshore market and the offsetting position in the offshore market as well. Particularly in the offshore market, they have to pay a higher premium to unwind, and that is getting reflected in the onshore premium as well. That's one reason. The other reason is that even as we all know, war is continuing. Oil prices are not dropping. Oil prices once again hovering above 110 Brent oil, and there is expectation of inflation, headline inflation, creeping up everywhere, and that could mean tighter monetary policy. As far as RBI is concerned, they may not hike a rate when they meet tomorrow, but they could well announce a tightening bias. That's enough for the markets. So these, and of course, we also know that US yields are going up with all these inflation expectations going higher. So all across, there is a sense of yields going up, and if the oil price do not retreat within another couple of weeks, we could well see a restarting of hiking cycle by at least some central banks. So this is another reason why the forward premiums are going up as well. Now, yes, there also, there was some retreat by forward premiums yesterday as the position unwinding kind of slowed down. But the factors like oil and importer hedging will definitely continue to support the premiums. Now, yesterday as we started the market after a long break, there was a lot of optimistic note as a 45-day ceasefire proposal was supposed to be entered into by US and Iran, led by some mediating countries. But that has faded as the day wore on because Iran outright rejected any temporary ceasefire. They actually want a permanent end to the war. Trump, he's supposed to have sent a 15-point demand so as to sign a ceasefire treaty, which to which there is a counter proposal by Iran with their own 10-point program. Now, both these demands are so demanding that the other parties are unlikely to accept them, as it is. So, and yesterday we also had a press conference by Trump where he said that U.S. Army is capable of finishing the Iranian country within no time, the key facilities, etc. So uh, again, we are back to square one. The markets are again looking at the uncertainty, how long the war is going to proceed. Key thing is that the Hormuz Strait is still under the control of the IRGC, and there is a selective passage of ships through the strait, and definitely that is keeping the oil prices higher. Yesterday, I said that whatever the news flow may be, which can be reliable or not reliable. It's the oil price that is going to reflect the reality on the ground. The oil price sustainable starts to fall, then there is a possibility that there is the countries are nearing a peace plan. As it keeps higher, I think we are far away from such a situation. So that's what is happening right now. Today morning we have seen the oil, Brent oil trading near 113, about $6 away from its recent high, and that's keeping the markets quite subdued as well. So we keep tracking these development. Doesn't mean that these things will be looking dire for long. Could suddenly turn positive also. So we just need to keep tab on the news and the realistic developments. And I would stress once again that the oil price would be oil price and this what happens on about the control of the Hormuz Strait. These two factors will be the key for the markets. Turning a bit to economics, we also had the ISM services PMI from US, and that actually showed a drop from 56.1 to 54. Particularly the employment side went into a contraction, reading 45.2 from 51.8. So that's a big worry because we have already shared yesterday about the non-farm payroll data, which has showed just the average of 22,000 increase per month in February and March, and how the job openings and quit rates were also falling. Job cuts were also higher. So there is overall softness in the employment situation, which is reiterated by the ISM services data yesterday as well. Now, but for the inflation fears, Fed probably would have been reacting positively by adopting a dovish stance. However, that's not so. Now it's more than a year since Fed has been talking down the inflation, or rather projecting the inflation as a temporary, although it is more than a year since it is well above their target of 2%. So it's very difficult situation for the central bank as well, because we on the one side the growth could impact because of the lower employment, and the inflation could keep the monetary policy higher also. Whether the governments adopt a fiscal route for addressing these problems is another. So there are a lot of questions than answers, which keep the markets in an uncertain zone. So all the recoveries as of now are definitely being used to, temporary, and can be used by sellers for reducing their positions as well. Uh, as as far as India is concerned, we are looking at a couple of positive point, although the undecided, or rather the continued war situation in the Gulf is keeping things quite challenging for us. We have the RBI meeting tomorrow, concluding tomorrow, and press conference by the governor as well. Possibly, we could see the RBI announce certain measures to address the vulnerable sections of the economy, particularly the small and medium term enterprises. But I think there can be a tightening bias that can be seen by the. I'll be surprised if they announce continued neutral stance as well. That's one focus. Independent on the positive side, another tanker, LPG tanker belonging to India has crossed the Hormuz Strait. That means supply situation is further supported. That's a good development. So reports indicate that there are only few more tankers which belong to India is are waiting to be allowed to pass through the strait. That's a good development. And in another development, Moody's, the international rating agency, maintained our rating at triple B minus, and that is also comforting, because they are considering the current challenges due to the war as possibly not so impactful unless it continues for much longer. They are also taking note of the improving fiscal metrics as far as India is concerned. So I mean, there are some short-term relief for the markets in India. However, the rupee, as you said, it continues to, face some uncertainty. The technical positioning in the banks, perhaps now in the last few days, reduced. So the selling pressure from the banks might be slightly coming down. At the same time, the war situation is also keeping the dollar well supported. We had seen very good demand below 93 yesterday. At the same time, facing resistance at 93.20, and the bigger resistance is at 93.70. If broken, we could well be on the way to 94 once again. But having taken such a strong measure, the RBI also will be ready to meet such a situation because they have shown their intent not to let the rupee go beyond 95 levels. So once again, near to the ground on the war situation. And then, of course, the markets will be volatile both ways, depending upon how the news flow is going. Thank you.
Thank you, Jacken. Yep. The eyes, one eye would be on the news and one eye on the monetary policy tomorrow. Of course, the 48-hour deadline, the self-imposed deadline, is coming to an end. And what kind of actions there would be in the markets, in the geopolitical space, is something people will be closely watching out for. And when it comes to the domestic markets, RBI's meeting MPC decision will be announced tomorrow. There is likely to be some sort of a tightening bias, not a rate hike, but a tightening bias, which may to control the imported inflation. But apart from that, rupee continues to face uncertainties. On one side, we have got the banks unwinding their position. The deadline is April 10th. Mm. And on the other hand, of course, importers are wanting to sort of jump in and lock the rates because the underlying theme for rupee continues to remain unchanged. That's it from us today. Thanks for listening. We will catch up tomorrow with the fresh round of updates.